Hi, I'm Paul Gawler. I'm the CEO and co-founder of Tribeca Resources Corporation. Tribeca is a newly TSXV listed copper explorer with a very strong focus in northern Chile, in particularly in a place called the Coastal IOCG Belt.
Brilliant, Paul. Lovely to meet you. And we've also got Tom there in the background. Folks, we'll talk to both of you during the course of this. But let's start with an easy bit, because it's the first time we've you're relatively new boys to the scene, quite frankly. When did you list?
It was late October, and then started trading in early November.
Really, properly new. But you're in the right commodity for us, copper. Paul, maybe start with you. What's your background?
Yeah, look, I'm a geologist, Matt. I've have a long experience all the way from greenfields, brownfields exploration, all the way through to feasibility studies, etc. I've spent a lot of time with large mining companies, I guess companies like MIM, Xstrata, Copper, Glencore, etc. And spend a lot of time all around different parts of the globe.
Right, and does that give us a sense of the type of mining, the exploration that you want to do here? Are you thinking like a major on this one, or are you not quite as ambitious as that?
We're as ambitious as that. I guess from our background, and Tom and I, maybe Tom will tell you a bit more about this later. But from our background, we both met when we were with Xstrata Copper. So we're certainly looking for those big deposits, and IOCG deposits have those characteristics. There's an Olympic Dam in South Australia, which is a 9 billion ton deposit. Candelaria, Lundin put out their new mineral reserve and resources last week, 1.2 billion tons at 0.6% copper there at Candelaria, which is in the Coastal IOCG Belt. Then there's a raft of other big ones around the world. So we're thinking big. We're not interested in the tiny little vein deposits,
right,
etc.
Well, we better finish off on the team structure. I mean, maybe Tom you've got a bit of a Clearview background, but give us a sense of the team and the other kind of players on the team who are actually doing things, not nameplate exercises. Who's actually doing what? So Tom.
Yeah, sure. So Thomas Schmidt, I'm the president and co-founder of Tribeca Resources. Paul and I founded the company privately a number of years ago. And in terms of the team, we're running pretty lean and mean here, kind of channeling the spirit of the old Xstrata, keeping our overheads down. So the team is effectively Paul and I as kind of permanent employees. We've got an outsourced CFO in Vancouver that came with the shell company that we merged with for the reverse takeover that we did for the listing. And then we're really using on the ground a number of different consultants with who are extremely experienced in different areas. We've got some former Xstrata colleagues helping us out on some of the admin and legal. And a very experienced geologist leading the effort on the ground there alongside Paul on the current exploration program.
Right, okay. And I think we better do a bit of terminology here, because there's a big audience here who are very much into copper, they're into the battery metals, but there's also a sort of uninitiated audience who perhaps we need to help along the way. So let's start with IOCG. What's it mean? What's the significance of it?
Yeah, so IOCG, Matt, is the acronym for iron oxide copper gold deposits. And as you can tell by that long name, they're polymetallic essentially, and they vary globally. Those deposits in Chile tend to have copper, gold, and cobalt is also a big part of them. So they really fit into that battery metal story. You may be familiar with Santo Domingo, which is up further north of us, but they've put out, they're owned by Capstone or Capstone Copper, I think they're called now, and they've put out their feasibility study, an update which actually includes extracting cobalt as well. I think they do that via a pyrite concentrate and some roasting. So IOCG deposits are very polymetallic, and that's in Chile. You look at the big deposits in Australia, for example, and Olympic Dam is copper, gold, uranium. I think they may be amongst the world's biggest gold and biggest uranium resources globally. And also silver, and they have rare earths as well in that, which I believe goes to their tailings at the moment, and they're looking at how to extract that. So these things are somewhat complex deposits, but and polymetallic, but they potentially fit really nicely into the battery metal story.
Yeah, uranium is a byproduct. I love that, and a big contributor to uranium production globally. That's how big these things are. And obviously, you're talking about the Chilean sort of that coastal IOCG belt. There, you've named some pretty big companies with some pretty big deposits. It's a good country for copper. But again, the news headlines out of there over the last couple of years in terms of confusion around the They changed the constitution, etc., and potentially royalty rates, etc., and so on. Why did you select Chile as part of the why did you select Chile, first off?
Yeah, well, look, I guess we went into Chile for two reasons, two primary reasons to do with Tom and I. My experience in the IOCG Belts, and there are 4 key terrains globally, and Chile's one of them, so it was an obvious place for us to go. But also, Tom worked there extensively with Xstrata Copper, where he was involved with the Collahuasi joint venture and Antamina up in Peru. So Tom had some incredible networks there in Chile, and we certainly made the most of those. When we decided to get into Chile, we basically went and spoke to all of our networks, looked through all the public information we could find to try and dig up what sort of projects might be around. So that's why we went to Chile, for the expertise and the networks.
Okay, so and it wasn't a case of this'll do. There's a case of you're both copper guys. You've got the experience in Chile. So let's talk about the sort of thing in terms of the brief, as it were, or the remit when you were searching. What precisely were you looking for? IOCG background, I get it, but what were the other kind of variables that made this the deal for you?
Yeah, look, we were, it was partly tied into the stage of the market as well, and this was probably around 2016, 17. And the market wasn't particularly flash, and there wasn't a lot of money around for greenfields exploration. So that we essentially wanted to step up that curve a little bit. So we were looking for projects that were a little more sort of mid to advanced stage exploration, and that involved, either some drilling to show that there was a copper system there, or some pretty extensive old historic Perconero workings, for example, that showed you there was a big system there. So that's what we were looking for, was sort of mid stage exploration.
Right. So in which case, what? Okay, you're looking at artisanal works, or the equivalent in Chile. That is indicative, but it's not completely empirical data. So was there historical data that you inherited when you picked this project?
Yes, and you've really hit the nail on the head there, Matt. That was a big part of it, and I guess our philosophy is to look for opportunities that others have missed, and a lot of that resides in historic data. So, for example, our La Higuera project had a reasonably extensive geophysical database with induced polarization and ground magnetic data, and we didn't feel it had been properly really appreciated. And what we saw in it was quite interesting. There was some drilling on the outcrops, but if you follow the geophysical data under the thin gravel cover just off the side, you could see these systems continued. And that's exactly the sort of evidence that we are looking for. It's the tip of the iceberg, I guess. Sort of
right.
style.
Okay. And what does that actually show up then? Because obviously you got these like huge, like you're calling it a belt, but you've also probably got these sort of very large sort of digital signatures that you're looking for. What sort of encouraged you here?
Yeah, I guess what encouraged us is, in the past, I guess there's been, and in Chile, because there is so much outcrop, you have the Alps rising there, and Chile is renowned for having geologists who are fantastic at mapping in the field. But in Chile, back in the early 2000s, when the last work was being done on the projects we've gotten into, for example, I guess geophysics was partly discounted or wasn't considered with such nuance, I guess. There's a very ready history in Chile where people go and do induced polarization and magnetic surveying, and they go and drill it looking for a big porphyry, etc. But to try and pull it apart a little bit more and integrate it with the historic data is really what we were trying to do. And I guess what we're trying to do in the future is introduce a few more of those geophysical techniques, because they haven't been heavily applied in Chile. But for example, I've seen a lot of them in Australia in particular, a lot of other things like electromagnetic surveying, etc., that is picking up different types of IOCG deposits, but hasn't really been hit hard in Chile.
Okay, so I guess people are most interested in, certainly your last press release, 268 meters at 0.66 copper. That's pretty punchy, and some gold credits in there as well. That was a pretty punchy start to the story. How did you decide where to go targeting and ultimately put the drill bit in?
Yeah, well, it was a really nice story actually. We dug the old data up and we sat down and had a really good look through the geology, and we thought we had an idea of what it was telling us about the trend of this mineralized system, because there had been historic intersections over about probably 400 meters, and they increased from sort of 0.2 to 0.3 up to the final drill hole as far north as was drilled historically was 285 meters at 0.4% copper. And then it hadn't been followed further north. So we think we understood this system. So we said, well, let's go another 100 meters north and drill along that structure. And that's exactly where we hit those intersections. So it was nice. It was a sort of a bold step out, but we think our model is sort of partly being confirmed now, which is good.
Okay, I guess you kind of set a rough your own back in the sense that it was extraordinary. It certainly got the market's attention, and you've got to now repeat this, otherwise they'll be slightly disappointed in you. So, in terms of trying to maximise your ability to replicate these sorts of numbers, have you kind of done a sort of a drill model? Do you know where you're going next? You know how deep? Where have you got to the thinking?
Yeah, well, I know exactly what you're talking about, and we're trying to tackle this. We've collected some more geophysical data, some gravity data, which is very important. You don't see a lot of in Chile, but in Australia it's used pretty widely, and also some more ground magnetic data. So we're trying to understand this thing. So we had this trend, but as always with exploration geology, you may have an envelope, but it is a matter of targeting within that envelope as to where the high grade zones are. So that's what we're trying to get to grips with. We've finished a 9-hole or we're close to finishing a 9-hole program, and so we've released results from the first 3. So I guess we're waiting on results from the rest of the holes, and we're going to put all that geology together with the geophysics and really try and get to the nub of what's controlling in detail this system, and then we'll plan our next phase.
Right. Okay. Now, obviously, explorers do the raise money drill program until they obviously hopefully at ever increasing prices. You raised how much when you listed?
Tom, would you like to cover that?
Sure. Yeah, we did a slightly untraditional model where we raised money privately prior to listing. It was part of the deal that we had with the shell company that we would deliver the asset with some cash as well. And so we raised just over $2 million US privately in February last year. And we did that from our networks effectively. So 2.6 million Canadian from a group of investors who are mostly kind of industry professionals. And we've got a cornerstone investor in there for a big share of that as well. So we did that in February, and then we listed the company with the cash in there. The shell that we merged with for the reverse takeover also had some cash in it. So we came to market with all said and done, and with the transaction expenses having been incurred, with about 2.6 million Canadian in the bank when we listed.
Right. So Tom, sticking with you. So first of all, have you guys, how much has management got in this?
So I mean, I guess again a bit unusually, I think we Paul and I obviously built the business from scratch. We self-funded from when we first put it together about 4 or 5 years ago. Paul and I have basically been not taking any salary, and we've put the cash into. We acquired 4 properties. The 4 properties are adjacent. They make up what is today the La Higuera IOCG project, but that was all funded by Paul and I. And then we raised that 2.6 Canadian in February, which obviously we got diluted through that process and then through the RTO. So where we are today, management collectively owns 41% of the business. So, I think it's fair to say that, we can put our hand on our heart and say we've got real skin in the game here. I mentioned earlier the mean and lean approach. In terms of salary, we're also trying to keep our overheads low. So Paul and I are taking, I think what we could say is conservative below benchmark salaries as well. We're really trying to make sure that we maximize the amount of money that's going into the ground here, because we think we've got an exciting project and we want to understand it better. And we think the way to do that is, keep the overheads low and put money into the ground. Right.
Okay. And you give us an indication of what the share register looks like, but any sort of names that people would recognise and value?
I mean, potentially, people in the industry would know people. Yeah, I mean, these are not necessarily nobos, so we can't sort of go disclosing names. But yeah, certainly, former head of investment banking at one of the big Canadian banks. We've got a Scandinavian cornerstone investor who came in for a big piece, who's some high net worth based out of Europe, and a number of other industry professionals with listed Canadian companies and former colleagues.
Right. Okay. Interesting. Right. So with the capital that you got available to you, you've obviously done nine holes. Is it cheap drilling in Chile? I mean, I don't know how many meters that equates to.
Yeah, we did. We've done between 2,800 to 3,000 meters of drilling. And I guess, when you put it all together with the geophysics and the whole lot, we've probably spent, I guess, about $1 million in what we call our phase 1 work program. But we're averaging direct drilling costs, I guess, of about between 130 and 150 meters per meter, dollars per meter, sorry. Yep. So it's reasonable. Yeah, it is what it is, I guess.
Okay, no, that's fine. That sounds very reasonable.
But I guess it's all. I should also note that we're certainly helped because we're using a local drilling contractor based out of La Serena, which is 40 minutes down the road on a 4-lane highway. So it's fantastic infrastructure and very easily accessible. So it's not like expensive costs of supporting activity up in the high Andes, for example.
Yeah, no, absolutely. Going local is good. Outsourcing is good. So, and Tom, just back to you before we go there. In terms of obviously okay, I think Tom, you were in Europe somewhere, and obviously. Paul, you're in Oz. So, with regards to your ability to be on the ground regularly, or your ability to have a team on the ground who can manage things for you, how does that work at this early stage? Yeah,
look, I think we're set up reasonably well. I spend probably just under 50% of my time in Chile. At the moment, particularly given that we're drilling, etc. And we have a local consultancy group based out of La Serena as well, and so that's headed by an experienced geologist. So he's essentially running the program on the ground for us with a couple of his people, another geologist doing the logging and a lot of field assistance, etc. So I think we're reasonably well in the field. Set up, and then of course we have, I guess, like others, we have our lawyer in Santiago, and also as is obligatory in Chile, is to have your land person as well, making sure your tenure is all protected and up to scratch in Santiago, and they're consultants for us.
That's a really good point. The land people make sure that you're paying up in time. You're not going to lose anything. So that whole kind of it's a big mining history there, and obviously for copper especially. But for a TSXV company kind of coming in and for the foreign direct investment, that's still welcome. There were no sort of barriers to entry for you when you set up, when you listed last year, were there?
No, not at all. I mean, there was a bit of investor sort of questioning of obviously the geopolitics in Chile around the time of the listing. But obviously that's one of the advantages and why we chose the RTO option versus an IPO. Obviously certainty of execution there. Had we been trying to do an IPO at that point, it might have been difficult to get it away. And obviously I think we took a lot of comfort from the fact that others were doing deals, obviously in Chile around the time that we were doing our IPO as well. So that gave us a lot of comfort that the big guys were putting money in, South 32 and others, and we saw some smaller investments get announced just after the constitution was voted down, with the Cisco and Goldfields coming in there for sort of minority stakes in a couple of projects. Talk and Marimaca both got money there as soon as the constitution was voted down. So I think we were able to kind of, assure our investors that, yes, there was a lot of negative perception around Chile, but, that the reality on the ground wasn't quite as bad as the headlines seemed to suggest. And at the end of the day, it comes down to not only what does Chile look like, but what's the relative risk of Chile versus other places where you might go looking for copper, right? And you can't get around the fact that Chile is the biggest copper producing country. I think it's 27% of copper comes out of Chile. Which is, I think, 2.5 times more than the second biggest, which is Peru. So it is all about, what's the risk, but also not only in absolute terms, what's the risk relative to the potential reward, right? And we just look at Chile and, the geological endowment that the country has, and then specifically the opportunity to bring Paul's global expertise in the IOCGs into what we think is an overlooked belt. And we just think all of that, you put that all together, and it's a sort of basic risk reward, but we think it stacks up pretty favorably.
Yeah, no, I think it's a great country for copper and quite frankly doing business. Santiago goes quite European in its outlook, and hopefully with the constitutional component behind us, it's a little bit clearer for everyone. Just on terms of how you move this thing forward, it's super important. Like, okay, spend $1 million. got just over $1 million left. So are all the assays back from all nine holes?
No, we're still waiting on the assays. I guess what we've had to date has been a turnaround from arriving at the lab to final results of 35 days. I think it is. I did the stats just yesterday. So we're still waiting on those results to come out. Quite a few of those, and we'll be releasing them. I guess they'll be our news flow over the next month or two as they come through. So a big part is putting the story together with the assays, and like every company these days, we've done sort of multi-element assays so that we can actually try and use all those elements to get a good understanding within the system of any vectors to where the higher grade may be, or any understanding of how it all fits together. Because it is difficult. We're under between about, I guess, 0 to 60 meters of gravel cover. So it's not like there's a lot of outcrop we can map. So you really have to suck as much information as you can out of those drill holes. So when we get those assays back, and we're just finishing a lot of the logging now, we'll put that story together and then plan the next phase of drilling, which I'm hoping will be sort of a mixture of infill and extension drilling on the current system.
Right. Okay. Well, you know exactly where I'm going here, because you're talking about building the story up, and you're building the story up for the market. You've got to write the headlines, and you obviously internally want to do things the right way geologically. So you think you're going to be able to do the next phase of drilling, phase 2? Is it phase 2? We're going with phase 2?
Yeah, phase 2.
With your existing cash available to you, hoping to paint a nice picture for investors before raising additional capital, presumably when?
I think what we'd probably look at doing is always maintaining a sensible cash reserve. We don't want to run the cash reserves down. So once we've done the work that Paul was talking about in terms of putting all the drill results together with the geophysics, and we know what that phase 2 is going to look like, we'll then make a decision about how we're going to fund that. Whether it's from a portion of existing cash and some new cash. But that'll depend on what phase 2 looks like effectively. But we think based on the results today, we're pretty encouraged about what we're getting. We hope that with those we can put together a nice phase 2 program there, and we think we're pretty encouraged, and I think there's follow-up work merited. So we'll be wanting to move that forward. As quickly as possible, especially if the market stays strong or gets stronger.
Well, there's the interesting debate, isn't there? Because I think copper price has been good, but a big disconnect between equities and copper price. So that's been a tough one to try and work out. Obviously, if you look at the supply demand fundamentals, most analysts, commentators would argue that it should only be going up with infrastructure and EV thematics building, strongly. So I hear what you say, Tom, but you would hope. I know you can't say anything because you haven't got the full, the data back from the 9 drill holes, but you would hope to kind of do a step up. I'm kind of interested in ambition and scale. You said at the beginning we're ambitious, we're thinking big because that's where we come from, that's our heritage. You would expect. Like a 3,000 meter drill program for phase 1 is great, but next phase you would what would you want to be able to do?
I guess there's a bit of background before immediately answering that question, Matt. Is the current program? So there was about 300 meters of strike length. We stepped another 100. That's 400, and then we've gone about another 400 or 500 meters north of that with a couple of extra holes. So what that basically makes a 900 meter strike length, and we'll see what they come back with. So that's basically sort of the reach that the next phase of drilling will be looking to infill along that 900 meters of strike length. And how that is going to happen will obviously depend on particularly what comes back from the holes further north, where the drilling is a little bit more sparse. But I guess we'd potentially be looking at a somewhat similar, I guess, magnitude of drilling program coming up. So
if I could step in there, I mean, in terms of the ambition, what we're really trying to do here is supply the next sort of generation of deposits for the producers, right? So what we've seen really going back to 2012 is the copper producers, the majors and down through the mid caps, doing very little in terms of growth. So the sort of classic growth levers are, you can go out and explore and you could find something, right? You could build something that you might already have in your portfolio, or you can go out and acquire something through M&A. And because of shareholder pressure, really going back to 2012, where they've been banging the table about operating efficiencies and maximizing cash flows and shareholder returns, the producers haven't really had the ability to go out and grow their businesses. And we think that at some point, those same shareholders are going to turn around and they're going to say, well, show us your growth pipeline. And a lot of these guys, don't have a lot of internal growth options available to them. And so they're going to be needing to go out into the market, or they're going to have to rapidly ramp up their exploration activities. But, going out and pegging ground, especially in a place like Chile, is incredibly difficult. And we could talk about that, separately or perhaps another time. But, the way the system is set up there, it's really difficult to do. So we've gone out looking for deposits. And Paul mentioned the initial exercise we did where we mapped out the belt. Like, our criteria was, we want to get into something that's pre-resource, but it has to be something that we can move up to, a maiden inferred resources, or possibly up as far as a PEA. And we think that's where our skill set is best suited. But it has to be something that's going to ultimately meet the criteria of at least, the mid tiers. So, the Lundins, the Capstones, and the Hud Bays of the world. But, if we get lucky, we'll get something that the majors will be interested in. But that's really the ambition here. And that's ultimately the sort of, I guess, role we're trying to fulfill here is, and we've been doing this for a number of years, as we've talked about. But that's always been the ambition in terms of delivering into their.
Okay, but then that clarifies it, because I think it's important for people to understand what they're getting into, what they're investing into. So I appreciate your point on ambition can mean different things. But you're not here touting, say, oh, we will take this thing through to production. You know who you are.
Yeah, and I think that speaks a lot to, as well, to sort of Paul's background as well. He's got a very varied background, but one of the things that Paul did, and he's too humble to bring that up himself, so I will. But he led a team that discovered an IOCG deposit in the Carajás in Brazil called Pedra Branca, which was sold into an Australian junior, and that's actually how Paul and I first met. When I was kind of running copper M&A in Latin America with Xstrata, I went across to Brazil and helped Paul divest the deposit he discovered, because it was too small for Xstrata, and we sold it to an Aussie junior who ultimately took money from BlackRock and some private equity funds out of London, and then sold it to Oz Minerals, and it was a bit of a success story, and it's now been put into production. So Paul effectively discovered that deposit, and so to some extent we're trying to replicate that type of outcome is what we're trying to do here. So
okay, well, guys, it's been really fascinating hearing how you've set this up and what you set out to do. So there's a few things that we should probably be looking out for this year. I mean, Tom, it might be worth you kind of just summarising, if you don't mind, what those items are and how we should be valuing you going forward.
Sure, absolutely. In terms of what to look out for, we've obviously announced drill results from the first 3 holes of our current 9-hole campaign. So that's just winding up, as Paul mentioned, and so there'll be assays coming out from the remaining 6 holes. Paul talked about what we're then going to do in terms of putting that information together with the geophysics as well. So there'll be, later this year, in the coming months, a phase 2 program. Once we put that together, we'll announce that to the market. Prior to that, we might put out some geophysics as well, alongside or in between, the remaining drill results. So it's really around, understanding what have we got here, and how do we move the project forward. So there'll be a phase 2, and I think that'll be quite telling in terms of what we think as a team we've got here in terms of what that phase 2 program then ends up looking like.